Back in no time at all. It's gone country. Get down and loose. He's gone country. Back to his roots. He's gone country. A new kind of suit. He's gone country. Yeah, he comes. New kind of law. He's gone. To the island where the snow now do fly. Give me a one to be for dinner every day again. Yeah, now the sun sailboats searching for the breeze. Someday it can stick right to your skin and make you feel fine. And let's move right still away. I better yeah, we can take for a chance. And
All right, everybody, get ready. We'll be starting here in about 5 minutes.
Staring at the road, and pray to God I see headlights. Made it down the coast for 17 hours, picking me a bouquet of dogwood
Good morning, Jerry.
and see my baby now.
Happy Friday, everybody. Let's get things rocking here. Rocking, rocking. All right. Happy Friday, everybody. It is the last day of February. So, February 28th, 2025. Welcome to our live trading room. This is our live stream. I want to welcome everybody. We do have some students from all over the world. I'd like to welcome everybody from the US and also Singapore. We have some folks from Dubai. Wow, just everybody all over the place. So excited to have you here. So, all right, a lot of things. Let's jump out to charts real quick. Looking across at the equity indexes, and let's see right in here. Not much of a reaction off of all the reports. Now, I do want to point out, and let's see, there we go. I do want to point out that we have been tracking this for about the last 8 weeks here, or sorry, last 6 weeks. When we have multiple economic reports coming out at the same time, and here you can see international trades, personal income or PCE, retail and wholesale inventories all came out at the same time. Okay. Over the last 6 weeks, we've noticed that, and this is what we always do. We observe and document. Okay. You've got to see what's going on out here. When we have multiple reports coming out at the same time, we've noticed we've got kind of a nothing burger, as one of my friends says here. Big old nothing burger. Okay. Quoting you, Liz. Uh, yeah, we things didn't move. The indexes didn't react. Okay. Now that might seem strange because in prior to the new administration, we used to see very volatile price action. But since so much light has been shown on the SEC, so many lights have been shown on the naked short selling and all the other things that are going on in and out of the world there. Um, the markets have changed, okay? And as we are evolving into whatever is going to happen, but we know something big is about to go on, we need to be really observing these changes, okay? And as you document them more and more, you know, get um, a good consistent flow of tracking that information. Something else that caught my eye this morning while I was doing pre-market routine is our stocks. NVIDIA is down 22%, 34 points off the all-time high. Broadcom down $55 off the all-time high, 21, almost 22% down. Alphabet, okay, down $22, down 20, almost 23% off the all-time high at $38 down. Okay. Are you noticing something? I mean, it doesn't feel like we've had a real bear market or a big correction, but we have. Okay. The other thing I want to point out is that the volume is the lightest we've seen in the last 7 weeks. Okay. Dow 30 stocks. We always track that volume, but the volume is the lightest in the last 7 weeks. Light volume, big volatility or big price moves. Lack of buyers are stepping up to buy stocks. But as we pointed out in here, okay, we're going to watch the metals and FX markets today. We were looking for more of a reaction. Let's see, we were looking for more of a reaction off the dollar and the yields, okay, to help give us an idea. Now, the indexes are below the 50-day moving average, the S&P and the Dow, S&P and the NASDAQ for sure. And we need to start paying attention to where the 200 simple moving average is. Okay. Now, let's see, bring that back up. On a daily chart on the S&P, we can see that the 200 simple moving average is about 58.46. Okay. The other thing to keep in mind is that Fidelity, okay, in their bylaws and in their fine print, they will tell you when they go to 80% cash. Okay. That means it's big 900-pound gorilla, Fidelity out there. They start slowing down their trading once price has dropped a certain percentage off the high, 20%. Okay. And they also, you watching that 200 simple moving average. Now, when we have had that big of a drop, very often we get a very strong reaction off of this. Okay. So whatever pullback we get now or close to now, I'm going to be monitoring the daily 200 moving average, and we're going to look for them to defend that. Okay, we've got to see if the buyers are going to step in there. If they're not stepping in, then we're going to see a very big, another down leg, okay, a big down leg as the big banks and institutions get out. Now, one of the best examples of this is going back to 2020 when we had the COVID, or 2021. Okay. Yeah, where we started seeing price closing below the 200, okay, and then the reactions off of that, okay. So once the big players start, like Fidelity, big 900-pound gorilla there, once it starts going to cash, we start seeing some very significant cracks and things. Now, uh, I'm not trying to play doom and gloom. I'm saying, hey, there's some opportunities coming up, okay? And we need to be aware of those opportunities and when we can step in. Now, the opportunity may be, you know, becoming more defensive on your longer term portfolios, okay? At least having a plan, okay? All right, let's step out. We got pit open on crude oil. The Globex range, 92 cents. Daily ATR about 161. Okay, so we're kind of still right around the middle. Okay, now what I've noticed on crude oil this morning is not a lot of big activity. Large time frame on crude oil, we had a very nice move back up through that pocket of points after a fresh accumulation of orders was formed. Now, price comes back down and retest the origin of the strong move up. We will be looking for, kind of right in that range there, an opportunity to see if there's any leftover buy orders there. Okay. Right now, you can see that there's a small rally, base rally right here. That is in the wrong location. You might get a little bounce. Okay. But we want to see a opportunity to go long in a demand zone. Okay. Nat gas also I am anticipating a bounce on nat gas. 80, we had 8 cents or 9 cents there for the Globex range, comparing that to the daily ATR of 25 cents. Okay. Also still kind of a choppier session open, okay? Or here at the pit. Now, let me explain that for a moment. When we take the Globex range and we compare it to the daily ATR, we often find that we have, if the Globex range is very narrow, about 0 to 40% of the daily ATR, we often get a nice trending session. Okay, and this is on a lot of things here, and I challenge you guys to observe this. Okay, let's see. I got to make sure I'm monitoring the chat. Good morning from Jakarta. Good morning, Jindy. Glad to have everybody here. So coming back to this, Globex range compared to the daily ATR, 0 to 40%, we often see some good trends in the regular session. 40% to 70% Globex range compared to the daily ATR, we see a really choppy environment, okay? When the Globex range is wide, 70% or greater Globex range compared to the daily ATR, we often see that we're looking for the bull trap and the bear trap, okay? Just different strategies based on how that Globex range, overnight trading, compares to the daily ATR to help you set up your morning. Now, having said all of that, there's not much to do on the nat gas and crude oil at this morning in trading the open range 5-minute candle, okay? So we're going to wait a little bit on natural gas and crude oil as a potential trade. We did have a little more reaction on gold over here. Oh, good morning, Elite Trader Funding. Glad to have you here. Elite Trader Funding is one of the prop firms we are working with. In I'm glad that they're coming in and seeing what we're doing here. We will be putting some promo codes in the chat if you guys want to evaluate and look at the Elite Trader Funding. And if you've been struggling with your personal account and not getting the desired results, okay, maybe it's time to take a break and start working on a proprietary firm, okay, a prop firm, and get your trading plan back in order. Okay, we'll talk more about that in just a moment because I'm really a strong fan of, as people are learning, a prop firm can offer you a lot of well, it, you can use their money versus risking your personal money while you're putting everything together. Okay. And the rewards are very substantial when you pass the evaluation. Gold. Okay. Gold has had a nice pullback. We were expecting kind of a drop on the equity indexes this morning and then potentially a strong rally back on up. So I want to keep a close eye on gold. I'm going to drop down to some smaller time frames, just kind of see. We have a speed bump here, but we also have this little area where price may bounce off of that as well. Okay, just a little more reaction. Back to our economic reports for a moment. The next one is at 15 minutes after the session open, Chicago PMI, and it's by itself. Economic reports that have been by themselves, having their own little time slot, have gotten a bigger reaction than when we have multiple economic reports at the same time. Okay. All right, let's come back out here. We want to pay particularly close attention to what's going on in the pre-market. Okay, we have seen that the trend is very high. It's above 2, okay, and it's been much greater and throughout the session. This implies that there's some more upticks, up volume, more advancing issues than declining issues. So somebody's buying up the market on the NYSE today, okay, in the pre-market. That doesn't mean there's a trade or an entry for a trade. It's just information as we look across the board. The VIX is holding the high ground today. It's still a little defensive, and our pre-market indicator gapped down. So the NYSE stocks traders are very bearish. A big gap down. Okay. Now, when that bearish market comes out, if price is dropping into a demand zone on these stocks, okay, as we pointed out, the stocks are gapping down. NVIDIA just came down to a demand zone. Probably need a little more on Apple. We're Alphabet also in a demand zone. Tesla's had a pretty bumpy ride there. Yeah. Hi, Andre. The dead space. Let's come back out. Which one we are here? The dead space area is an area between resistance, qualified resistance, minimum 3 touches, and qualified support. Okay. The impression I get is that this is why I call it the dead space. It's because inside that area, resistance and support are filled orders. Remember, the price chart reflects transactions that have already happened. So when we spend so much time, or price spends so much time in a range, all of the orders are filled. So the anticipation is when price gets back into that range, it easily moves on through it. Okay. So to the upside, price may move pretty swiftly through the dead space. And we have several larger time frames that, as the markets had just been oscillating back and forth for the last several weeks, we have some very wide dead space areas. Therefore, my comments that I put in some of in the pre-market and what I posted out there on X this morning is a bear market rally. Okay. And if price does start shooting up, everybody's going to think it's happy days again as price goes through these dead space. Okay. So I'm anticipating that if price does start to move up, we may see some good, strong price moves. Okay. But we do need price to come down first. Okay. And find us a zone where we can actually make a trade. So S&P, I'm eyeballing down at the 58.20. Our prep screen zone is down 57.65, 57.48. Okay. We have NQ, which appears, see, once we have that resistance area, we start having the location of where an accumulation of orders is coming into play. Okay. Meaning resistance price more sell tickets than buy tickets. And then the area below a qualified resistance would be that potential fresh accumulation of buy orders. Now, even though this is setting up and when we're outside day, you might want to take the breakout to the upside. Got a nice, very few obstacles coming into play right here. Okay. But what we have noticed time and time again, okay, is when we get that strong price drop and then we have multiple touches of resistance, this on a higher time frame is what we would call a drop base drop. Okay. And with the drop base drop, we want to anticipate that this drop base drop area often leads to what we would call is a V-shaped reversal, a very strong reactant back up. Okay. And I'll explain that on some of the smaller time frames as we get closer to making some trades. The Dow, and I just want to double check the Dow. The Dow is still below the 50-day moving average, and we want to check. I need to add another one. I'll put that on a little bit later. We want to check where the Dow has the 200 daily simple moving average. Okay. Russell. Yeah, here's some of the small time frames here. Let's go down on the Dow. Yeah, the Dow is, see how the Dow has that dead space? And the longer it stays in that dead space, okay, the more orders have been filled. And when you're looking for higher profit potential, okay, higher profit potential, the dead space or areas where we have a light volume rally or drop or gap, those are areas where price moves very quickly. Okay. So in observation, you can go back and look and say, well, hey, you know what? Price did a sweeping move down there and did a sweeping two moves up and did a sweeping move. Okay. So all those orders have been filled in that range. We're right now in that range. Should we be expecting price to continue going up to that resistance? Okay. Now, as the dead space goes, more and more orders have been filled in this range and easier price movement. Okay. But we still need a good entry to participate in that. Okay. Russell, also looking for a very similar pattern like this. See the drop, see the multiple touches of the resistance. Okay. And then see the V drop. Okay. The V reversal. That's what this picture is starting to look like. Okay. So what I've done is use my Fibonacci price extension, extended down into a demand zone, 2123 on the Russell, rough area where we have a demand zone and Fibonacci price extensions. So if I were to visualize the right side of the chart, I would be looking at something like this, a very steep drop. See, just compare, and then potentially a big rally back to the upside. Now, as that makes a resistance area, watch how price making a lower low, okay, often gets that false breakout area and then retraces back down, okay? Now, prices have memory, and these chart patterns are very common reflections, okay? So as price rallies back up or potentially rallies back up, the breakout point here may be short-lived, and we can always correlate that with if there is a strong drop or if there's like a little pocket of points, okay? And then we would see the pullback before we get potentially a strong move up. Notice the small pullback here, okay? So there's not a whole lot to do. That's why I'm teaching a little bit more this morning. We're waiting to see what this market is going to do. The lighter volume on the Dow 30 stocks does imply there's a great deal of no buyers, okay, for stocks. Why are we talking about stocks? Well, the stocks move first, then the exchange traded fund, then the futures adjust up and down. If the stocks are showing light volume and the potential of very whipsaw price action, we have to take notice of that, okay? Because a strong drop or a strong rally is going to lead us to where the buyers or sellers are at, okay? After all, price is going to drop until it finds a large stack of buy orders, or it's going to rally till it finds a large stack of sell orders. And that's what we're looking at here on our prep screen, okay? All right, let's come back out. Gold is getting a little bump to the upside, and I wanted to come down to a smaller time frame. There it is. Look at that. Almost that similar price pattern, okay? We got resistance after a strong drop, okay? We've got the drop down. It did hit the low part of that zone, okay? Now, these reversal type patterns, okay, a V-shaped reversal is a pretty aggressive uh, reversal, okay? And what I would anticipate, and I don't have an entry, but what I'd anticipate is price to come up, get a shallow retracement before continuing, okay? So when we start recognizing a lot of these uh, price patterns, okay, we have to use that information to anticipate how we're going to enter, manage risk, and participate in a trade, okay? Having that plan ahead of time is like forecasting turning points, okay? Now I'm going to look see if this low point, if it matched up with a Fibonacci price extension. And when we're looking for reversal patterns, we're looking for like a 127, 1618, 224, 2618, and 314 extension. Okay. And we haven't quite lined up with one yet. Okay. So for gold, if we get a reaction down to about 2843, that's going to be a great potential opportunity to step into that and get a strong reaction back up. Okay. So kind of a lot of setting up today. Let's see. Yep, we got gold in that range. We're looking for a reaction back up. Gold will react. Platinum, silver, copper, they will react once we start seeing a little bit more commitment on, excuse me, what the yields are going to do. Okay. Right now, the 10-year and the 2-year yield have been going lower, and that's not really good for stocks. Okay. It's making our markets, our government look kind of weak at this point. Okay. We did have a breakout on the US dollar. Okay. And now potentially price coming back down to the origin of that move. We got to watch the dollar. Now, the dollar and the 10 and the 2-year yield, okay, are great odds enhancers to inform us a little bit more about the trading environment. Okay. Now, that trading environment, when the dollar and the yield are correlated, going the same direction. I'm using an hourly chart to kind of get that picture. What I'm mainly making reference to is the last basically 10, 20 candles. What direction are they going? Okay, so on the dollar, I could say, well, the last 10, 20 candles, price moving lower. Okay. Um, for the 10-year yield, I could say with the last 10 candles or so, price is still kind of flat. Okay. And we could say that for the 2-year. Now you could come out and say, okay, well, we are making lower highs and lower lows. I get it. Okay. But that's a longer term. We're using hourly charts. So yeah, it's a longer term perspective, but we're looking for some shorter term, what are these doing? Are they correlated or are they not? And I would say they're not correlated right at the moment. Okay. Therefore, Jeff's going to be teaching a little bit more, like an inside day. Okay. I'm going to be trying to hold you back from trying to make a lot of little trades that might take just little nicks out of you. You're taking too much risk until we have more information. Okay. So hopefully you're picking up on that. There are times when I'm just right in the market and trading. And there are times when I'm backing away from it because I need more information. Okay. The information that I'm sharing with you, the trend, pre-market indicator, volatility index, yields, dollar, they're all little feeler gauges to help us understand the trading environment we're getting into. Okay. Along with the news, how US mini stagflation and the yen. You see, they're still working on that yen carry trade. Okay. And we have to be aware that the yen is really being reaction because they're changing interest rates. Okay, their currency was in trouble. There's a lot of things that are going on, and that yen trade is really impacting as they unwind it. Okay, now many years ago, we were also seeing how the euro was the strongest currency. Okay, and then there came a point where they had to unwind it, and it took a long, long period of time, and I would say 6 months to a year to unwind the euro trade. Okay, and now they're unwinding the yen trade. Okay, and that happens when uh, countries borrow money from themselves to buy U.S. treasuries or the yield. Okay, and then they leverage themselves up. Okay. Let's see. We have PCE data, and then we had Tesla, NVIDIA, Bank of America, also coming out talking about how the tariffs are going to be big. Okay. I'm not seeing the tariffs as a big catalyst yet. Okay. Could make things a little more expensive, but we're already kind of used to that. Okay. We've already kind of trimmed up, and you're seeing a lot of data come out that is showing that things are trimming up. Okay. Thanks, Harvey, for putting the questions over there. I want to encourage everybody that's in our live stream, if you have questions, post them in the chat. My team puts them out there for me. If I usually will go and check them out right away. If I'm saying anything that um, you need a little more clarification on, happy to help. That's what we do at the Market Institution. Okay. And they're off. What do we got going here? Silver's moving lower, gold holding a whole lot of nothing. Indexes are pulling back. Excellent. Okay, so what we are expecting, what I'm expecting, is areas where I might have a opportunity to go long after price drops a little bit. Okay. Remember, next economic report is coming out in 15 minutes. As we've gone through the first half hour of our session, we haven't found a lot of things to jump into, okay? You need a very, very solid pre-market analysis, okay? Once you have that analysis and then you track it for many, many days, okay? I mean, it just becomes part of your routine, okay? No different than, a routine of crossing the street. You're going to look left and right, or you look right and left, depending on which side of the planet you're on, okay? But it's just a normal thing. When you start to cross the street, you're looking for danger, okay? And that's what we've done in the pre-market. Hopefully, I've kept you out of trying to make a lot of transactions right now and wait for the right setup. The right setup happens around the quarter hours. When price arrives in a zone on the quarter hour on time, we have seen more of those reaction. Okay. Oh, okay, I can do that. Yeah, thanks for the questions out there. Now, price is coming down to a Fibonacci price extension area. This is not a zone. Okay, the zone is down below where we have other Fibonacci lines lining up together. But on the NASDAQ, that'll be 20,434, 20,388. Okay. We're still seeing the Dow stock or the NASDAQ top 8 large market cap stocks still making some lows. They haven't started to bounce back up. Therefore, it's not the opportunity, and price has not arrived in the zone on the quarter hour. As we kind of dial this in, we're looking at things that we can measure over time. And as we measure over time, we're then getting more and more confident in the potential trade opportunity. Okay. So, question came up. Okay. How do we use the Dow 30 as a gauge? Okay. In the pre-market, Dow 30 stocks, and you'll see that a lot of the Dow 30 stocks are listed on the multiple exchanges. You have some stocks in here that are listed on the NASDAQ exchange: Microsoft, NVIDIA, Apple, Amazon, Cisco, Amgen, okay, just for a few, okay? And you also see that all of the Dow 30 stocks are listed on the S&P 500 index, okay? So the Dow 30 stocks is a price-weighted index versus a market capitalization-weighted index. S&P, NASDAQ, Russell are market capitalization. So the large market cap stocks move the index more than the smaller market cap, okay? Also, you guys observe what's happening right now with the S&P getting really close to the 200 simple moving average. And we also have an 88.6% retracement there, okay? Now, as a sentiment gauge, when the volume is light, look how light this is. There's no buyers. Okay, there's traders and margin calls and all that fun stuff going on, speculators, but the big institutional traders have not stepped in. Look how light the volume is. Light volume leads to high volatility. Okay, now some traders are very good at trading that high volatility, and some blow up account after account with high volatility. Okay, we're in a potential high volatile area, and we're seeing prices drop on the equity indexes. We're planning to make a trade based on, well, are futures oversold right now or overbought? So another sentiment. Cash versus futures. Futures are derivatives. They follow the cash market. So we currently have 1, 2, 3, 4, 5, 6, 7, 8, 9 Dow stocks negative over 94 cents. And we have 11 positive. Okay. Now we take that 11 positive, 9 negative, and we net the results, leaving us with 2 positive. Multiply that by 2 and we get 4. Cash equals positive 4, and futures are trading at negative 6. S&P futures are now oversold relative to cash by about 10 points. Futures oversold, dropping into a demand zone around the quarter hour, okay, provide us with a high probability potential price change, okay? Now, between 8 a.m. and 11 a.m. on the quarter hours, okay, we observe that there is a lot more trading activity that goes on, okay? Therefore, the trading activity, number of transactions greatly increases around the quarter hour, okay? So when price arrives in a demand zone, S&P futures being oversold, dropping into a demand zone, the things that are outside the price chart tell us to get ready. It's almost like stretching the rubber band down. And if you're holding it, stretching it down and you're going, they let go, it's going to hurt. Okay. So that's what we're seeing right now is the rubber band was stretched. S&P was oversold. It did not hit a demand zone, so I did not have an entry. It just bounced off the Globex low. Okay. Okay. We're still just making an accumulation of orders. I'm planning on the NQ. If we get priced down about 20,408 to 20,312, that will be an opportunity. And we can already see that, let's see if I have a 200 on the NQ. We're well below that. Yeah. Ooh, NASDAQ's below the 200. Uh-oh. All right. So Dow getting a little bounce. Russell. Okay. Still waiting. Our internals. We can see that the buyers are coming in, but they haven't got to the extreme yet. When you're monitoring the trend, $TRIN, the short-term traders index. Now, the short-term traders index is an index for the NYSE composite, the stocks. Okay. When the markets are dropping and the trend goes high, that's the opportunity to look for the buyers to come in. The trend will often the trend will often have a high reading about 15 to 20 minutes before price hits a demand zone. Okay. If the trend is high, then we want to buy. If the trend is low, we want to go. Okay. VIX is increasing. We see that VIX is up about 30 cents. It's getting past the extreme volatility area and getting up to the next range where we've had some very significant reversals. The other thing with the tick right now, okay, notice the upticks over the downticks on the NYSE. We've already stated that the Dow 30 is trading on very, very light volume, okay? All the Dow 30 stocks trade on the NYSE exchange, and a lot of the S&P 500 trade on the NYSE, and some of the NASDAQ stocks do trade on the NYSE exchange as well, okay? Now, we haven't hit a buy program and we haven't hit a sell program. Okay. In fact, it's pretty quiet here around the open. See, these are things that are outside the price chart that are causing us to wait. We're not missing anything. And the more that you document this, you go, okay, just relax, get another cup of coffee. Okay, I'm not rushing in to do anything right now because we don't have a great environment that has lower risk and higher profit potential. Okay. So these things that I'm mentioning and covering today greatly are in play because there's not a lot of things to jump right into at the moment. The advancing issues over declining issues on the uh, NYSE are a little more on the bullish side, but we're still in the no trade zone. Okay. Now, for me, what all of this information does is it causes me to understand the trading environment and not be too aggressive or opinionated on, hey, the market's going to move off of this economic report or that economic report. Okay. As we stated earlier, Globex range compared to the daily ATR, oh, right up here, 161. Okay. Was about the middle of the range. Look at what's happened with the open range breakout trade. It's not going anywhere. Choppy. Okay. So some of the things that I've stated earlier, why I'm not looking to participate is a very specific piece of information, measuring the Globex range and comparing it to the daily ATR to say, hey, it's going to be choppy. If you're good at taking very quick profits and short-term trades, and then that's your environment. Okay. If you want a longer running trend, then uh, take a little bit more time. Okay. Same thing on nat gas. Nat gas is, well, we got 8 cents compared to 25 cents. So we're in the bottom 1/3. Okay. So for natural gas, we could be looking at more of the narrow side of the Globex range. Therefore, we may have a good running trend and a trading opportunity looking down about that 3.861 and 3.824 in that range. Okay. Oop. Yeah, just another hello, and I'm glad that I have many past students that were from Singapore. I love teaching over in Singapore and Indonesia, China, and those areas. I mean, it was a great time to be, and they're great people over there, all learning how to trade. I just want to say hello to everybody. We got a lot of you folks out there today, and see that Jerry's here, Anthony's here. Um, just glad to have you. If you have questions or anything, reach out to our team or type it in the chat and we can go over a few things. Okay. All right. Notice how gold coming down. We have 2 minutes before the economic report comes out, and it's an economic report by itself. Okay. So sometimes when everything sets up, we have to kind of choose what we're going to participate in. So I'm going to use a couple of micros. I'm going to keep it to 3 micro contracts on gold, and I'm going to trigger this 2843 area. 2843 to go long. Actually, it's right on the 40. I'm going to go 44. Excuse me. All right. So 2844, I'm looking to go long as a reaction to the economic report that comes out. Okay. Now I'm not going to give a whole lot of risk. I'm going to give it down to about 2837. Okay. So what I'm looking for is a price to drop, react off of that report. Okay. I'm willing to risk to the distal line for my stop loss. Okay. Now I want to get these in place. That order's in place on crude, on gold. And we have no open positions. Now let's get over to the equity indexes, S&P. And nothing yet. NASDAQ. Okay. Still looking for the reaction. Got a nice bounce off of that one, but there were too many things that were not quite right to get me participate in a trade. Okay. All right. So now just looking across the board, we've got a nice bounce on these. So price coming back down on the NQ, 20,434, 20,388. Okay. Currently, we're making a lower low. If price takes out the sellers, we're going to look for that speed bump trap. Okay, right above the resistance. Price making that lower low, we often get that little breakout and then retracement before starting an uptrend. Okay. So I'll look to take a long down in this range. On the S&P, I don't have a lot set up yet. Okay, we do have a nice support. And we'll wait for that. The report came out and then not even a reaction. Okay. Isn't that strange? Not much a reaction on the equity indexes. What is this market waiting for? Okay. Have we got the Epstein files out yet? I don't know. Okay. What's going on there that the market is not in, or traders are not coming in? Okay. All right, let's jump out on the Russell. And nothing going on in the Dow. Okay, so something's got to come out that's going to get us down to demand or up to supply. Man, up Qs came down. That's support. That is not a zone. I believe that's what I was looking at. Yeah, support. We have two levels of support on the NASDAQ. Okay, we just bounced off of one. Next support level on the on Qs, 484, 483. And then we have a zone down below. So if the Qs are not in a demand zone, then the index is not going to go up. Okay. Wow. Isn't it strange? You guys feel that things are kind of strange out there? I mean, we didn't have we had a downside gap. Okay. Wasn't a breakaway, wasn't a runaway gap. We did have a breakaway gap to the upside on the Dow, but nothing going on there. All right, let's look around. Platinum's holding. FX markets. Yeah, we already, let's reset that zone up on gold. Okay, and we're still looking for gold to come down into that zone. We had a smaller time frame now. On the gold trade that we did place, okay, we're just waiting for price to get to us. You can see that there was that little resistance. So by having very specific chart patterns that you look for reference to make a trade, the area that I'm going to circle right here, okay, we want to go down to that small time frame like we did over on the gold tab here. And we can see from a larger picture, what that resistance is and the price drop. Okay. Now in the smaller time frames, we can risk less on a potential trade. Okay. But being able to see, where were we at here? Being able to see those fractal patterns inside of that, okay, is by having very specific price patterns you're looking for. Then you choose which time frame is more productive for your style of trading. Okay. We do have a copper is right in demand. Or sorry, right at support. Swiss franc is in a demand zone. Okay. But the dollar's not showing much fluctuation. nor is the 10 and the 2-year yield. There's a lot of things out there that are just not lining up to where we have really favorable market conditions. Good point, Liz. Yeah, Liz is making a couple of comments in there, and it feels like we're waiting for some news to break, okay? And one of the catalysts would be as if like the tariffs that come out, and thanks for posting that, Liz. The tariffs and for Canada and Mexico get pushed back or something like that. That might cause a rally, okay? But overall, we just went through basically 5 market moving economic reports and the session open in a big old nothing burger, right? Nothing burger. So now we have to rely on what would be the catalyst? What is the potential catalyst? Okay. Well, we do have our zones and everything marked and we're ready for the trade. Okay. We're just waiting for price to come to us. Okay. Still. Now this is going to be a V-shaped reversal if we get filled. Okay. Price is still dropping towards us. Right. How are we doing on Russell? We got the fake out, little breakout testing the speed bump. We're down on really small time frames trying to find a way to get into these things. Thanks, Harvey. Thanks, RP. Yeah. Well, rightfully so, because there's so many things going on. And his comment was, everybody's at the mercy of Truth Social. Okay. Where you get the presidential tweets and all that fun stuff. Okay. There's always that wink, wink, nod, nod. Okay. But the reaction of price is always going to go to a supply or to a demand where the unfilled orders are at. Okay. Um, Actually, we might be anticipating, we got 7 minutes till the 10 o'clock reversal. There's our price going sideways right here. Okay. This is also alerting me that you got the potential breakout, but you have a little headwinds right there into a pocket of points and a dead space. Okay, but these price patterns have often had are in front of a V-shaped reversal. Now, I don't know if I'm going to be able to get into the trade. Okay, but we might be able to identify the potential direction. Okay. See, there's one thing that has been becoming more into light here is many of us can call the market. Even newer traders can call the market pretty accurately. But that doesn't mean they can trade it, apply proper risk management uh, to that trade. Okay. So I'm still, actually, I think I'm going to take a poke at this here. We're right around the 10 o'clock reversal. We have this, what we call this is a speed bump. Got relatively small risk on the trade. About 30 points. Hmm. Daily charts not giving us much indication. And the stocks are not really reacting up or down at the moment. Okay. Double check the volume. Oh, the thing that I will point out is that we have seen some very unusually large volume on the S&P and the NASDAQ futures, not the stocks. That might even feel like a flight to safety. Part of the other things that are standing out today is that we do have the 30-year is a contract rollover either today or tomorrow, and then we have the 5-year contract rollover. Okay. Identifying when contract rollover is on the 5, 10, 30-year bonds and notes is another piece of information that when you know that is happening over, we started at 14 days, then to 21, and then 23. Okay. They have different times. So these are big, big markets that they have to move a lot of product when one contract expires and another one coming into play, contract rollover. Often the market conditions during that time can be kind of range bound while they're moving things around. There is a lot of attention on the 30-year, the 10-year, and the 5-year, and we see that they've had strong moves up, almost like a flight to safety. Okay? Almost like that flight to safety. All right. Starting to see a little more reaction on crude oil, demand zone on crude oil. And the other thing that we want to point out is we monitor when we have unfilled pit and 5 p.m. close, because these areas, and we also have a demand zone in there, these areas price tends to come back too. Okay. Now it's a little late to get into this for the open range. I would anticipate waiting for price to bounce back up into that supply. Looks like we have well, it might even have a potential breakout. But it does feel like things would be more risk right now to take a breakout trade versus waiting for a zone entry. So unfilled pit and 5 p.m. close. And then we also have a zone down below as well, 68.71. Okay. Double check the dollar and the yields. What are they doing? Oh, okay. They're starting to sync up now a little bit. Okay. So potential for a breakout trade below 69.19 crude oil. I'm going to wait for the demand zone. I just don't feel like I should be taking extra risk this morning. Ooh, we're getting close. Come on, gold. Make us look good. Let's see where that Fibonacci extension is at. For it to be a V-shaped reversal, a very strong reversal, you need price to align with the 224, 2618, or 314 extension. Come on. You're only 2 ticks away. And it's right on time. Come on, you can get it. Now, there's always risk on a trade. Don't miss me by a couple of ticks. No, you guys are jumping in front of me. Don't do that. Wait, wait, wait. Oh, come on. Yeah, that's the problem working on these. I show you guys where all the good zones are, and then you jump in a little bit in front of me. Joking, of course. Yeah, the 5 years already rolled. Come on back down. Let's get our entry. Let's go back over to the equity indexes. All right, we're getting a little pop out. Got the support down here. BKX is our bank index. The bank index, a little more on the bullish side at the moment. We are seeing NVIDIA and Apple moving up, okay, which is impacting the equity indexes. Nice double bottom, probably on a higher time frame. We now have a fresh buy territory that is formed on a smaller time frame. See, if you're trading supply and demand, okay, you're going to see a supply zone inside of a sell territory. The sell territory is identified by finding support or resistance areas, okay? Now, there are multiple opportunities. You have the breakout if you have your support or resistance there and it's highly qualified, or you have to wait for price to return to the origin of that move, okay? And I'm gonna drill into this one here. This was the origin of move, but it's already kind of a support. Okay. How are we doing with gold? Just missed us by a couple of ticks. Now you're going to have to assess, okay? I'm going to give this just a few more minutes because the indexes are pulling back. If gold starts to move up from here, then we have other products that are close to a demand zone that will also start to follow, okay? Such as platinum, copper, and silver, okay? Yeah, on a 60-minute chart, we might have to take a big picture entry. You have to give it a little extra risk. 43.7. Okay, I'm going to start off with 2 micro contracts, and we may add on to this as we go.
Order filled.
Okay. Let me keep my initial stop close. Let's see. I'm going to keep it at about 40. I'm going to start, just get it below the session at the moment. So trading 3 micro contracts, we have $147 worth of risk on this trade. Okay. Now I'm a little more aggressive on trades with this particular price pattern that have aligned with the Fibonacci price extension level, as we anticipate the price will rally up and break that resistance before it'll pull back. Okay. Now that doesn't mean it will happen. That's just what I'm visualizing. And that's how I'm managing my risk. Get into that. Okay. In observation, last 10, 20 bars here, IWM moving up, Dow moving up. S&P and the Qs are not moving up as aggressive. Okay. There we go. Okay. I'm glad I didn't take the breakout. Now I will be willing to take the breakout on crude if it does come lower. I'm going to set the trade up. My target will be down to the zone and this unfilled pit area. Okay, so in that range will be my profit target. My entry will be 69.19. Just using a couple of micros, 69.19. The order is placed. Once filled on that, I'll come back in and place a protective stop, or I'll put a trailing stop of about 25 cents on that. Okay. Silver not getting a bounce yet, and it doesn't look like. Oh, this will be a good piece of information. Okay. You're seeing silver drop in this example. Okay. And as we look for a qualified demand zone, we're showing it down here. What happens when price starts to turn and there's nothing over to the left-hand side of the chart to help you see a demand zone? When this happens, in order to get a move back up, the chart may have to show a fresh accumulation of orders being built. Okay. You see, the accumulation of orders when we build that sell territory or when we build a buy territory. When price doesn't intersect with a demand zone or a supply zone and starts to turn, it has to build a fresh accumulation of orders before it can turn. Okay. So if you're looking over to the left, say, oh, I missed this, I didn't get it. And then you try to figure out there's a wick over wick or something inside there. Okay. Picking on you, Miss Chris. Okay. Allow yourself to wait for a fresh accumulation of orders. Okay. And that you can drop down to the small time frame. We got silver. Let's drop down to 10. Let's see if so a fresh accumulation of orders always starts with a resistance or support area. So you can identify where you're at. Okay. You noticing a lot of these patterns today? Okay. Price drops, multiple bases, and we get that lower. Now, this is where we're potentially finding a fresh accumulation of orders. It's not confirmed until price takes out the resistance area. Then you have a confirmed buy territory where your demand zone should be located. Okay. A lot of nuggets being passed around. Okay. Greg says, did you check AD and CD? I did. Okay. I got them up here. Aussie dollar just hit the proximal line. I really want to get in with the Swiss franc. That one has some additional information where we could see a good move up. Okay. Canadian dollars in the demand zone down below here. Okay. But we don't have any support that the dollar is dropping. Okay, actually, it's starting right now. Well, thanks for the heads up. Let's go out there, Greg. All right, so gold getting a move up just as the dollar is dropping. Beautiful. Okay, let's get over to our trade. Which one did you like better, AD or CD? ACDC. Let's get those out there. Let's double check. Okay, let's look at taking both of them. Now, what we need is a commitment and a picture that we're and a place where you can manage the risk. Okay. For those that are new, you're going to say, wow, that zone is quite wide on a 60-minute chart where you have your leg base group of candles. Okay. But I want you to take a moment and notice the leg candles inside the zone are bigger than the first leg candle leaving the zone. Okay. That means this is a proximal line entry. Price should not go too deep into that zone. So we can manage our risk because price has already touched the proximal line. We're still trading the March contract. Oh, you're welcome, Andre. Yeah, we do this every Friday. There is another class where we'll be today, about an hour after our live trading room, we will be jumping into a small class on making you aware of gaps. Okay.
Order fill.
I initiated the trade and I'm going to initiate my protective stop loss at the low of the session. Okay. Let's go over to the Canadian dollar. But now that we're in the FX markets and metals markets, what's going to impact the follow through is if the dollar is moving lower. Okay. So throughout this, you need to have a clear picture of what the dollar is doing and the yields. If they start getting mixed, you know you're going to be sitting through a bunch of chop. Okay. Just choppy stuff. If they start showing a definitive price move down or up, then you're going to have your answer. Okay. So a little more on this is so crucial for intraday trading. Okay. Dollar and the yields, if they're not correlated, it's choppy mess and you have a lot of risk on a trade. Okay. So learn to document this behavior in the market so you can say, okay, I want to get into a trade. Like we're approaching the Canadian dollar right now to get in. We're already in the Aussie and we're in the gold. Okay. Do we need to get out? Is there anything? Well, no. We watch the dollar and the yields. Okay. All right. So Canadian dollar is in the zone. And let's bring up the matrix CDH25. Can we post in the chat and in the Discord the links for um, the gaps class and also I think we have some promo codes for folks that want to get into using a proprietary trading firm. We can post those in there as well. Thank you, everybody. All right, so Canadian dollar, let's look at the zone. We have a leg, base, leg, base candle. Same situation. Leg candle leaving is smaller, so therefore we're looking at using the zone one time and very often does not go deep into the zone. Okay. So I'm going to initiate the trade on the Canadian dollar.
Order fill.
And they're going to place our protective stop right at the low of the session, keeping it tight. Okay. Now, if you have the ability to monitor the US dollar, the yields and stuff, okay, then be watching very closely for any discrepancies, okay, around that. All right, nice little bounce. Our goal for this is price coming up above that resistance. That's my target. And then we're looking for a small pullback. Okay. Now, if you have the ability to move your price away from that hard right edge, I know many charting platforms out there have price like this. Okay. Now, when you're looking at charts and you're just trying to see that last little candle and you got all sorts of lines and garbage in the way, okay, you got your P&L going up and down, okay, you become much more of an emotional trader because you're missing data to make you feel comfortable or if the trade is going to be right, okay? Having the ability to move your chart away from that hard right edge and then take the time and say, well, if price goes up, I anticipate it to go here. And if price goes down, I anticipate it to go there. Okay. What this does is it prepares a student, it prepares a trader to be prepared to trade both ways. That includes stopping out of a trade if it's not going the right direction, okay, or reversing the trade and going in the right direction. See, often we get fixated on small time frames and we kind of get lost and don't see the forest anymore because we're standing too close to the tree. Okay. By having a plan to go short or go long does force a trader to evaluate and look at larger time frames and smaller time frames together. Okay. And kind of get an idea saying, well, if price goes up, okay, profit potential is a little bit better. If price goes down, okay, maybe that's even better. Okay. The thing is, you're prepared mentally for a short, you're prepared for a long, okay? And if you have to make a decision, okay, lean a little bit more strongly on the larger time frame for direction. Okay. Thank you, team. We have such an amazing team out there. All right. Let's double check a couple other things here. All right, metals, FX market, potential move to after the PCE report. Yeah, I was expecting a little more reaction on that, but again, just making reference, multiple reports coming out at the same time. Indexes below the 50 moving average and the Magnificent 8 stocks, okay, down from their all-time highs, average between 9 and 40%. Be aware of the 200-day simple moving average. Fidelity goes to 80% cash if the indexes are below this 200 simple moving average and approximately 20% off the highs. So even with our equity indexes, ETFs, find your all-time high and become aware of how much price has dropped off the all-time high on your exchange traded funds. Okay. Now, Fidelity doesn't liquidate positions or go to cash in your account. It's their money it's your money they're using. They're just going to use less because of certain parameters. Okay. Now keep in mind, these mutual funds use your money because most of the time mutual funds are not leveraged, they're not margined. Okay. So the big mutual fund companies use that margin to do their own trading as well. Okay. Contract rollover on a 30-year bonds and 5-year notes within the next couple of days. Dow 30 stocks trading on lighter volume, lowest in the last 7 weeks. But average open interest on the index futures has been increasing greatly over the last 3 or 4 trading sessions. Multiple economic reports came out over the last 6 weeks. Multiple economic reports at the same time had smaller reaction. US dollar had quiet overnight trading after a strong price movement yesterday, 10 and a 2 years. So we've covered all of these things. But even covering and having a good plan, that plan has not provided us a lot of awesome trading ideas, okay, or entries. We have a lot of ideas, but not entries. Okay. Gold did come down into the area. We did take a shot on gold. Okay. We've got a good anticipatory price move to the upside. We do have a leg base in between. Okay. And that can act as a little resistance around that area. Okay. When you notice the leg base group of candles, 87 out of 100 times, you'll see the price will bounce out of that area. There are some unfilled orders. Okay. There may not be enough unfilled orders unless that zone is in a buy territory or sell territory to change the trend. Okay. But we have to anticipate that there is a little obstacle right here, a leg base. Okay. And we just hit that one and got a small bounce out of it. You can see with the tail. Okay. But that leg base is not a place to take a trade. It's just becoming aware of an obstacle. Okay. All right, where are we at here? And we're down a little bit on the Aussie and Canadian dollar. Okay. Now, the yields are helping us out for the index, for the metals to and the FX markets. Okay, but the US dollar is still choppy. If the dollar should get a big reaction candle, then maybe you need to come back over to the FX market, especially if the dollar starts shooting up, the FX markets will go down. That's the way that they're balanced out. Okay. Oh, thank you, team. Just making sure I'm keeping up on my messages. Okay. Any questions about what we've been covering or looking at this morning? See, not being aware, not having a community to trade with, you may have taken several trades on the small time frames and just been getting chopped up. Okay. What time is it? We're almost to the bottom of the hour. Dang it. Okay. We are seeing that the stocks on a 15-minute chart, okay, have made a bounce, but not a new uptrend. Okay. Uptrends have to have higher lows and higher highs. Okay. So we've made an initial bounce. This is not a trend. Okay. We're now seeing that the NQ is breaking out to the upside into a speed bump area. Okay. Now with a speed bump, we want to anticipate, and with the price breaking above resistance, we now have a fresh buy territory where we would look to go long in that. Okay. See, the breakout trade is one opportunity, and you have to have a breakout trade before you can have a supply and demand trade. Okay. So as price is breaking out, we have this little area over here, which we call a speed bump. Okay. Now the speed bump is just an obstacle. Okay. It's an obstacle where there might be some resistance. Okay. and we could anticipate a quick little pullback. So knowing if you have that speed bump, then breakout trades, you would kind of back away from it. Okay. But you would then start to look at, well, if it does pull back, is there a leg base down here? Okay. And my eyes just caught this one. So in a perfect world, to get a entry back into this potential move to the upside, we're seeing some strength on the stocks. Okay. Is to allow this speed bump or price to pull back underneath that breakout area. Okay. And then I could re-enter at the breakout. Okay. That would be a perfect scenario for me. Okay. See, I'm planning what I would do on this trade. Okay. So getting that pullback, now the zone itself is not active yet until it moves 2-to-1 away. Okay. These are all described in our content material and Mastering the Charts Part 1. And in Part 2, we get into a lot of the detail of the structures in the buy territory and the sell territory. With this particular structure, we made a low pivot in the middle of that range, and we made higher lows going in. So the potential for this price to keep moving to the upside is pretty strong. Okay. But we need a place to get in. And see, just knowing that what you're going to do solves half the problem. The other half is you got to wait for it. Okay. If you know what you're waiting for to have a low risk, high profit potential, and high probability trade, okay. Thanks, Harvey. Oh, great question. Hi, Andre. Yes, qualifying the area, because this whole picture right here is what we see as an accumulation of orders. Okay. The resistance area is just simply, and keep it really simple. I mean, all it was is there was more sell tickets than buy tickets in this range. Okay, that's it. Now, that resistance kept price pushing down where sellers were getting out of trades, but down below this whole range became where buyers were stepping in to support price. So an accumulation of buy orders. Okay. Now, once price breaks that resistance area, it's a confirmed accumulation of area. Now, when you're waiting for a demand zone as an entry, then you would wait for price to pull back into the origin of a strong move up for your entry long. Okay. As we look up and left, there are a couple other areas beyond the speed bump. Okay. This is what we light volume price drop. Okay. It doesn't mean everybody was selling. We call this a pocket of points. Okay. Light volume price drop. It just means nobody was buying. Okay. And when you get fast drops like that, it's telling us that there were no buyers. And as price dropped, it found buyers. We found some. And for that, you'd go over to the left and look at that picture. Okay. Is that why price bounced here where you had some unfilled orders? Is that we're going to have a lot of unfilled orders or just a small group? Okay. So it looks like the S&P is doing the same thing. And we got almost like a nice big double bottom down here. Any demand zone we're looking at, and I can see that this one was already price broke out and came back in. It's already been used. So you would find in their picture, you would find your leg base group of candles there. So that one has already been used. But price went up and found some more sellers, pulled back, and then broke and took out the sellers. Okay. So right at the origin of this strong move up, we want to look for the leg base group of candles. Okay. So we missed the breakout trade on the S&P, but we're waiting for the demand zone entry, or we're waiting for the supply zone entry. Okay. Not many obstacles there. Actually, you got a nice little, might get a little push up. And we're seeing NVIDIA coming off the lows, Apple stalling. But the bank index is still on the bullish side of things. So let's see, where are we at here? Gold. Did anybody take the gold trade? I know we haven't had a whole lot of trades today. Canadian dollars being sort of slow. All right, we're getting a little bounce off of the Aussie dollar. Now, with this, look up and left. Light volume price drops. Okay. These are what we call pockets of points. Okay. So there's very few obstacles as price goes back up to find suppliers or supply zone or sellers. Okay. So when you have very little obstacles, price can move pretty easily through those areas. Okay. Now, just because price can move easily through them does not mean you have an entry to just hit the button and jump in. Okay. Boy, this is going to be a challenge today. I'm going to have to be very, very patient waiting for trades to come to us. Oh, okay. Yeah, thank you. We just came to the end of our live trading room session today. I do want to invite everybody to our session in about an hour. It's no charge. Okay. You come in and just kind of observe. The reason we're doing the live stream right here is to make traders aware of what we're doing. Okay. We do have course material that can back up everything we're talking about, what we're showing, where we're looking for zones versus breakout trades, and so on. A lot of details in our Mastering the Charts course. But if you look in the chat, or even register on our website, themarketinstitution.com, you will find a link for the session we're going to do on gaps. Okay. And we'll come back and revisit a couple of trades that we were looking at here and see if we have any entries. I wish everybody a happy Friday. And it looks like we're leaving the session with a couple of positive trades, but some really kind of suspicious market conditions. Okay. So everybody have a great weekend, a great Friday, and we will see you in about an hour in the gaps session. Thank you, team, for all the work you've been doing behind the scenes. And we'll see everybody next Friday, or if you want to join us, we'll see you Monday.